right, GM everyone, welcome to another episode of Solana Weekly News, where we chat through the top stories shaping the Solana ecosystem and, of course, the industry more broadly. Now, it is Friday, as usual, but today is a very special Friday, not least of all because it's 7 days from the August 7/8 recess that Senate is going to be entering. So there's a lot hanging in the balance in terms of regulation, which is why today is a very special episode. We're kicking off a new segment called Regulatory Roundup. And honestly, I couldn't think of a better guest to launch it with. Rebecca Rettig, the Chief Legal Officer of Jito, is going to be joining us. Full disclosure here, SolanaFloor is a subsidiary of the Jito Network. Now, again, we are very fortunate today, I would say, to have Rebecca Rettig joining us because we need her to bring some clarity to the Clarity Act debate, which unfortunately has been raging on for far too long, far longer than we wanted to, and is to many of us extremely unclear as far as where it's going to go. Is it going to get resolved? Is it going to pass? Is it not going to pass? So much anxiety hanging on one decision. But if you zoom out, you'll notice that we have come so far in the last sort of 48 months, if you want to put it into a slightly longer time frame. So what I did is I went and I spoke to a few people earlier this week, and I asked, you're close to the matter, you're following what's happening in Washington, D.C., all the shenanigans. What would you like to find out? And the responses were interesting. Here are a few of them. When clarity? Are we doomed if it fails this year? Up or down after midterms? And this is my favorite one. How is Trump making so much money from crypto while we've been down only for 10 months? So with some of those questions, I'm going to bring on our guest in a second. Thomas, it is Friday. Happy Friday. How are you feeling?
GM, I'm feeling great. I'm excited. There is a lot in the regulation front, so I'm excited to have Rebecca on. It's going to be great. A lot of questions that I have, a lot of questions that we all have, right? There is no clarity right now, so we need some.
There is none, and we need some. And what better guest to talk to and to ask these questions to than Rebecca Rettig herself? Rebecca, welcome to Solana Weekly News. How are you?
I'm good. Thanks for having me. I'm excited. The Regulatory Roundup with Rebecca Rettig is like this great alliteration. So excellent.
I know. Pat on the back
Okay.
to me. As an alliteration maxi, I absolutely love it. I had to fight tooth and nail for that. I think we're going to run with it. If you like it, I like it. Thomas likes it. Everyone's happy. Bit of a mouthful, but
Yeah.
we are going to call it that from now on.
Okay.
Rebecca, I want to start with a quote from Senator Lummis here, because I think it really captures how many of us feel and have felt for quite some time. And I'd like your thoughts on this. So Cynthia Lummis says that she's tired of being played on the Clarity Act. She says that her bipartisan enthusiasm has been drained and it's time to vote. So I'm curious what you make of that. Is she basically throwing in the towel here?
She's not throwing in the towel. What she's saying to the Democrats is, you've extracted a lot. Let's stop playing the game and we can put it on the floor of the Senate to try to move it forward. This is a good bill for consumers, actually. Like a really good bill. It is really hard for industry. I know we're all spun up about getting the Clarity Act, and I think it will be a great thing. And I do think it'll be a great thing for the industry, but it's not smooth sailing for all of us afterwards. We have a lot of obligations depending on where you sit in the ecosystem. And so Senator Lummis is saying, you guys got a lot out of here. And it is very bipartisan. So let's just call it and now push things forward.
Well, fingers crossed that that does actually happen. Tiny bit of context here for our listeners as well, though. Senator Lummis has, I want to say, been one of the most vocal proponents of the Clarity Act, if not the most vocal, for quite some time now. So kind of, I feel a bit of sympathy, if you will, that she's so exasperated on the timeline. And I get the impression that there's a lot of smoke and mirrors happening behind the scenes in the background, sort of short-term political objectives are maybe overshadowing some of the economic and legislative objectives, which, as Rebecca's pointing out, is a set of objectives that many people think are in the best interest of the American consumer, of the crypto industry. And despite the roadblocks that we've run into, call them brick walls, if you will, I'm still quite optimistic about the clarity debate because, again, zooming out over the last sort of 24 months, 48 months, I think we've made a huge amount of progress. Rebecca, would you agree that we are overall on the right path as an industry?
Oh, that's a very big question, and outside of regulation too. But I think we're in a new era of crypto, right? I think crypto's had many lives, like a cat, and we've seen a lot of iterations, whether it's NFTs, creator coins, L2s. Like we've had a lot of narratives that have taken over the timeline on crypto, and we are moving to a much more mature narrative where crypto is becoming not just a point by itself in the digital financial revolution, but part of a larger narrative, right? Perps. You could have perps off chain, but on chain perps do something totally different and new and novel. prediction markets, you have off-chain prediction markets. When you have them on-chain, they do something totally different. There's a lot more transparency and information. And so moving crypto to be part of this broader digital financial revolution is the right way for crypto to go, I think.
Yeah, we like to hear that. And now, let's see. Welcome, Rebecca. This is my first time getting to interview you, so it's great to have you on. And I want to talk about the scoreboard here. So
Okay.
with where we're at, Polymarket just came out. It's 22% of this passing, and
Wow.
I saw a different interview where you were calling for, somewhere more about 35% odds of this passing. So for what does this mean? To somebody holding a Solana bag right now, we're all in the Solana community. Like where are you at with those numbers? Does that are you feeling like 22% feels accurate, or do you still stick by that 35%?
Maybe I'm down to 30 just because we're so close to the cloture line, but this is
Yeah.
about signed into law in 2026. And I'm not really sure where the sentiment is coming from. Like if people are like, oh, if they know that you could get it onto the floor for what's called the cloture vote, it's procedural. You have a number of procedural hurdles to jump over before you actually get to the substantive vote. And
Yeah.
people may just be thinking that if you don't get this, then it won't be signed into law in 2026, which is not the case. So I don't really know how people are showing sentiment here. I think the other interesting point on this is that in theory, congressional staffers, clearly from the US point of view, but congressional staffers are banned from using prediction markets.
Yeah.
And so you don't have sort of the behind the scenes information that you might otherwise have being filtered into this amount. Now, what I will say is, as somebody who has been following this for a very long time and is in conversations in the morning and in the evening almost every day to hear how it's going, you could feel totally depressed at dinner and really excited the next morning because one conversation happens overnight. Sometimes my sentiment changes hour to hour. So I've tried to be really consistent. Yeah, 82%. When was that?
That was February, I believe. Yeah, February 20th. So everything was great. But to your point, a month before that was at 40%. So you've got 100% swing happening in a 30-day period. And since then, it's sort of been a steady bleed out. And now, 5%.
Yeah.
This morning, we've lost in terms of how the market is pricing this in. But very volatile indeed.
There should be a cloture vote next week. It will be shocking if there is not. And the other thing I'd say is, if there is not, it's not just about clarity. There is so much going on in DC right now politically between what the president wants, some Republicans who are not seeking reelection or who have lost their big Senate votes in terms of reelection. And so are really being able to dig their heels in certain ways on saying this. I mean, we just saw that 2 Republican senators won't approve President Trump's replacement nominee for DOJ Attorney General. So there's a lot going on in DC. I know we all have main character energy about clarity, but that is one on a long list of things. And we saw the Senate Majority Leader John Thune on Fox, I think earlier this week. He listed a ton of things he's trying to do before the recess. And he was like, and I'm going to try to get clarity to the floor.
Yeah.
So
fantastic. It sounds kind of like crypto in general, where like it's over and then it's so back. The odds are up, the odds are down. It's crazy. Jack mentioned last week on the stream that he is going to be betting on clarity passing. So he's betting on.
I mean, it's US, I assume.
Yes.
Yeah. Well,
Yeah.
I mean, it
Yes.
sounds like he's betting on it. It sounds almost like you're. Where do you land on that? Like, would you say that you're like more? You would think that it would pass more than it wouldn't at this point, or what are you feeling?
So in DC, they say a bill dies, I don't know, 6 times, 9 times before it passes. So, the really interesting part about this, and I said it this pretty publicly earlier this week too, and I've been saying it, this bill is a win for the Democrats. I don't know why they don't see it that way. And crypto, the genie's out of the bottle. We're not putting it back in. Okay, fine. Token prices might go down if clarity doesn't pass. That's a factor of like our own, bag holding this and our own crypto, I guess, traders who want to or think that clarity is necessary to move forward. But if you think about the crypto industry on its own, we have not only prevailed, we have become a critical part of the digital financial economy, not only when we didn't have regulation, but when people were pushing against us. And we did some of our most innovative work then. And I actually think with the institutions coming in, that Clarity will put everybody on an even playing field. And so we will have to compete with the likes of JP Morgan and Citigroup and banks, and that may be very challenging. And so I don't think all is not lost. Jack, I know you said people were saying, like, is it over for us if Clarity doesn't pass? The answer is no. We will get regulation. We'll get rulemaking from the SEC and the CFTC on various things associated with crypto. People have stopped talking about the innovation exemption because the SEC brought it up so many times and didn't put it out, but they're really not putting it out because they're waiting to see what happens with Clarity. So we're going to get an innovation exemption about how people can potentially trade securities on AMMs. I think that's what it's going to be about, and maybe launch tokens in the United States. That's a huge deal. So, all is definitely not lost. And there will be a lot of information we get from the regulatory agencies if Clarity does not pass. If Clarity does pass, we're going to get a lot more information from the regulatory agencies too.
Yeah, it's hard to kind of take a step back and look at the big picture there, but if you do, just a couple years ago, a lot of what we were doing now was pretty gray area, if not being like actively challenged by the government, right? So
Yeah.
I think that we have made a lot of progress. It feels a lot better. I'm an American, right? So it feels a lot better for me. But I do want to kind of talk about this timeline, right? It seems like the news, the headlines, we only have a couple weeks to pass this, or it's never gonna pass. Like I feel like there's an urgency there where it's like make it or break it. Like what's your view on that? It's like if this doesn't pass, within the next couple weeks here or next week, is it just gonna get kicked down the line a little bit and we're still looking good, or what's your view there?
So if we get it on the floor for cloture to say, okay, let's go on to the next procedural hurdles, it will
Yeah.
keep moving. And so I think people really are trying to make sure that we have cloture and push that forward. I very much want to see that too, because it sort of has momentum then in a way that it wouldn't otherwise. In the next 3 weeks, people would forget, what do we think, whatever. I think it actually could be really good, because if you have a procedural vote and then you have 3 weeks to convince staffers and educate them for off committee senators on a substantive vote and say, here's all the tools it gives to law enforcement. Here's all the way it would make crypto exchanges like Coinbase have to do the same types of things as JP Morgan. It's not exactly accurate, but you know what I mean? Where you can sort of explain the narrative, explain the substance of the bill. Maybe that could be a really good thing.
Yeah, definitely. It seems like the optics of it, like it's getting like highly politicized at this point, right? The headlines are hard to read, right? It's Trump made 1.4 billion dollars in crypto. Don't pass this bill. It seems like the energy that I'm seeing from them, and it makes it tough to when there is like a really good bill that is good for consumers, to have it politicized like that. Are you seeing a lot of that too, or what's your take on those headlines? Like when you see those, are you just like disgusted at them and you don't want to see them, or what's going on?
I've been in crypto for almost a decade, so I have all sorts of feelings about the mainstream media. So we can put those to the side. I think that those are certainly not helpful to moving those across, but if you actually use them correctly, like this bill would, especially now with new ethics language, you have a
Yeah.
compromise on ethics that was put forward by Senators Gallego and Tillis that may actually address these kinds of things. Then why wouldn't this bill actually address all the bad headlines and
Yeah.
be a real win for Democrats to say, oh, we shut down this kind of bad behavior. We're bringing everybody into the regulatory perimeter. This is, I know I said it before, like, this is not some permissive bill that says, oh, the way you've been doing everything for all these years is exactly how we're going to keep doing it. It does codify certain types of things on, like, token launches as they are happening today are probably going to keep happening. And so the real question is, do we want them exactly as they are today? Because that's what you're going to get if you get clarity. So we're all really spun up. Yes, give us all these laws, but it's because it was such a painful and unpleasant process the prior 4 years. In terms of the cost of doing business was really like, are you willing to get a subpoena? Which is why the banks were not exploring technology that would obviously make the financial system better. So now we are seeing them do that. And that gives us a lot of competition. And do we want that?
Yeah.
Just quickly, apologies there for butting in. I know the American sort of debate around this is it being politicized, is it not? And you've got sort of layers that go below that. But the European approach to it, I find quite interesting. It's a lot shallower of an analysis, I think. The Europeans have decided that now, as much as, again, the truth is probably somewhere in between, they've decided this is so politicized that the short-term political objectives of the Democrats i.e., winning the midterms, i.e., making Trump look like a corrupt politician, are so far ahead on their list of priorities that they're willing to essentially kick the can down the road for up to, what, 3-4 years now. As Senator Lum has pointed out, potentially 2030 being the next time to actually get this done the way they want to get it done. So curious what your take on that is. Are the Europeans maybe just choosing to not read too far into it, or is that analysis a bit too shallow? What do you think as far as the political games overshadowing the actual regulatory objectives that people have?
Yeah, there's a lot of hyperbole in politics in DC or around the country in the US right now, and they certainly shape things. There's something called the NDA, the National Defense Authorization Act, which funds the military every year. It's a bill that happens every single year. I don't think we can really, just from a general perspective, say, oh, we don't want to fund our military. Of course we do. That even didn't pass the first time. It will pass this year, but there were all sorts of things that Democrats wanted to get, tagged on. Now, look, some of this, I will say, is normal. I've been working on crypto policy and crypto legislation for many, many years, including at times when it was not so front and center, not on the front page of the news. There were maybe 15 to 20 of us who were all working on it back in the day. And it was surprising to me to see how much got traded. Oh, yeah, sure, I'll vote for this if you vote for this other bill. That's politics in some ways. So, seeing the upfront politicization and the media really bend in or lean into the politicization of it is a lot because the midterms are coming.
Interesting. I have a $1 billion question here for you. It's also sort of coming from the community, if you will. They were asking about the worst case scenario, the bear case. Shit hits the proverbial fan. It really is 2030 the next time we get a chance to pass this. Doomsday scenario. Is 2030 reasonable, or is there a sooner opportunity to get this done? And the follow up that people wanted to sort of really ask is that 2030 potential, that risk of only getting this done in 2030, the main reason, or one of the main reasons why institutional capital allocators are really feeling a bit distant to crypto at the moment?
I mean, look, people want to see what's going to happen to the industry if clarity doesn't pass. Some of that is on us. We're acting like, oh, we're waiting for things to happen to us. No, lots of things have happened to us for a long time, and we fought back against them in really new and novel ways, right? To fight back against the SEC was never something people did in the past, and we did, and we won a lot. And so a lot of this is on us. Our bags don't have to go down afterwards. We can continue building novel things. We can continue working with institutions. So I don't want people to sit in this sort of I'm an optimistic degen. So, like,
let's go.
We have
We
a
love
lot.
that.
I mean, we just have a lot of power. So I don't think we need to see ourselves as sort of subject. Look, clarity should pass. That's actually just the right thing from a consumer protection standpoint. We have a totally new asset class, a totally new way of working things, and our financial rails are getting put on them. So I don't know why we wouldn't want this. Everybody should want it. And Democrats, as I've said, should definitely want this. And I think if something doesn't go well afterwards, in many ways, it may be on the Democrats' watch or for their failure not to have passed clarity and have, to your point, Jack, made it highly political instead of about what is really best for the American people.
I like it. So we got to work for our bags, and it's okay to do that, right?
I mean, I know that people don't want to work for their bags, but I think that's how it works everywhere else in the world too.
Yeah. So speaking of our bags, so like specifically about Sol, right? I think some people might miss this nuance where it's like Sol's commodity status kind of like rests on agency interpretation. Is that right? So that came with the March guidance. Like, is that something that could be in the balance with clarity? Are we concerned about that at all, or is that something that's already been
No,
solved?
Sol would be good under clarity.
We're good under clarity, but if it doesn't pass, that could be an issue.
I mean, I suppose the SEC could roll back their guidance in a few years, but
Yeah.
I think the crypto or securities narrative is over. I think, contracts that include crypto as securities, or selling the future interest in crypto or securities, that may not be over. But I think we're going to get a lot of answers from the SEC one way or the other once we see what happens with clarity.
Good. Okay, that was one of the main sources of anxiety as well, I think, aside from this, elephant in the room of Trump making $1.4 billion and the ongoing raging, actually, ethics debate. What happens to Sol as an asset, I think, was one of the main sources of anxiety for people. So that's really good to hear. Now, a slight tangent here, Rebecca, but this is something that appeared on our radar this morning, actually. I'm really curious what you make of this, and I'm sure you've got so many things you're focusing on. I'm curious if this even, was thrown your way this morning. New York sued Kalshi.
I saw that.
You saw that $36 billion in damages. They're alleging gambling laws were violated. Now, we've been covering prediction markets for a long, long time. Obviously, for months, we've been saying Solana needs its own horse in the race, along with perps. Prediction markets are massive growth verticals. So, Kalshi being, I think, the most regulated, if not one of the only fully regulated prediction markets. I honestly didn't see this coming. It took me by surprise. Plus, there's Kalshi was basically in talks to raise at a $40 billion valuation. So I get the impression that this sort of took a lot of people by surprise. Do you find this surprising?
No.
That you don't at all. So what's your high level take on this? Then I think 36 billion is a huge number. Is it a coincidence? Is it a nothing burger? Is there more to come as far as prediction markets being sued? Yeah, what's your TLDR?
Sure. The quick TLDR on this is I'm not surprised at all. The states have all been fighting with the prediction markets to say what's happening here is gambling. It's in our remit. And the CFTC is definitely going to come in. It will definitely intervene in the New York action, as it did in the Minnesota action before. We got a very interesting ruling in Kalshi and Polymarket's favor on Monday, maybe Tuesday, where they said that the Minnesota law banning prediction markets seemed unconstitutional, and that this was all within the remit of the CFTC. So this is just another in a long line of big fights. We have seen the New York Department of Financial Services be very aggressive. We actually saw Letitia James come out this week against Clarity, saying there's not enough law enforcement tools in there, which is actually just factually incorrect. I've read the bill. There's a lot of tools for law enforcement. And I think it's also because they want to actually assert dominance through the New York BIT license. And so New York coming out aggressively against prediction markets is not surprising. Again, it's just one in a long line of states, and there's going to continue to be a fight. And in 2027, we will see this issue go to the Supreme Court.
The $36 billion. Sorry, are we expecting a settlement then, or are we expecting this just sort of go away because, again, it's deemed unconstitutional by other agencies? It's in my mind such a huge number, and they're seeking that as damages. Then surely someone's liable for something, and then it has to settle. Or what happens there?
New York could just lose. We will see.
That would be great.
We'll see.
Why has New York been so tough on crypto? I feel like they've always been, one of like the last states to bring anything on. Is there something that they just have like particularly against crypto?
They did this. They did the BIT license in 2014 because they wanted to put together a regime for consumer protection. Yeah. And in many ways, maybe they have. I mean, they have really been out front. They have made this a really big flagship thing for them. I mean, I don't think of Kalshi as crypto. I think of Kalshi as prediction markets, but it really just goes to show that we're all thinking of this as part of the larger digital financial revolution.
Yeah. Yeah. And I feel like, especially when it comes to gambling, it gets really tricky because each state has their own gambling regulations as well, right? So to see this, they could potentially have 50 different lawsuits to go up against, right?
There are lawsuits going on all over the country in all different other states. So
crazy.
Mm-hmm.
So nothing doomsday-ish for prediction markets, and we probably shouldn't be considered about any spillover into Solana native prediction markets. It seems like it's
have to see the regulatory environment for how those are set up and which way, and if they are, more like Polymarkets offshore DeFi, or they're more like Kalshi and enabled through Solana. So the lawyer answer is we'll see. Or it depends.
Very, very interesting story that we'll be covering on SolanaFloor as well, and hope to catch up with you on that. But what we'd like to do, Rebecca, at the end of these sort of guest segments, expert segments, if you will, is apply a little bit of pressure, and I hope you don't mind. We like to go through a bit of a rapid fire round. And again, I know it's difficult. Your lawyer brain is probably going to kick in and say, don't give a yes/no answer, but we would love a yes/no answer as much as possible.
I was a litigator before I was in crypto, so very hard to give a yes/no answer, but try me.
Or a one-sentence answer in that case. We can compromise wherever possible. So we'll start running through some of these questions. Now, our audience, there's plenty of Solana degens out there, plenty of sort of power users, if you will, and everyone's wondering about the future of Clarity. Does it affect DEXs? Does it affect KYC? Solana perps DEXs come to mind often as well. Are they more likely to be forced into KYC, for example, or using VPNs? Bluntly, if Clarity fails, are the sort of Solana natives, the degens, going to be dealing with a lot more friction when interacting with DeFi?
You mean if Clarity passes, are they going to be dealing with more friction?
Yes.
Oh, maybe. This is the only bill that is going to have implications for DeFi, and there are types of sanction screenings guidance that will come out for wallets and front ends and things like that.
Okay.
Interesting.
Now, I understand we're coming up on time here, but I got
Yeah.
one more question for you.
Okay.
Our team hated this one, but I'm going to go with it anyways. Selfish question. What do you think is a better area to live in for crypto holders, Europe or California?
I mean, neither. I just have friends who have dealt with the California tax authorities.
Yes.
Maybe some parts of Europe. Does Switzerland count? You didn't say the EU, so I'd say Switzerland is good.
Switzerland's good. Okay. Yeah. The fact that I compared a state against all of Europe was just a big no-no, I guess. So I wanted to hear it. I'm in California, so that's why, I think that a lot of the regulations are a little wild. So
Thomas did catch a lot of flack for that one. And thank you for differentiating between Europe and Switzerland. We appreciate that as well. Rebecca, honestly, thank you so much for coming on and chatting to us. It saves us a lot of time, I think, just being able to talk to an expert, because we've spent months sifting through so much noise. As Thomas mentioned earlier, there's headlines that are extremely sensational. People are saying it's doomsday. Then you've got the sort of DeFi natives saying, I really don't want to pay attention to it, but look at the polymarket odds. They've slipped from 82% in February to 22% now. Surely that's terrible. So again, thank you very much for a very high signal conversation. And I appreciate you kicking off Regulatory Roundup with us. We will be catching up very, very soon. So thank you.
Thanks. Bye.
Yeah, thanks so much.
Have a great day. And to our dear listeners, Rebecca unfortunately does have to leave us for the day, but she'll be back, of course. I have great news for you. We're going to be doing regular catch-ups once a month with our favorite legal experts. So Solana Weekly News is really going to be your go-to source for everything, straight from Washington, D.C., all the shenanigans, but without the fluff. No noise, straight from Rebecca Rettig herself. Clarity, we're going to talk more broadly about how all of this impacts crypto going forward, whether DeFi is going to be dealing with more or less friction going forward. So do make sure you're subscribed to SolanaFloor on YouTube. And obviously by now you should probably be following our X account because we do cover it all day, every day. Thomas, what do we think? Are you more or less optimistic after talking to Rebecca about what happens to Clarity? And I suppose a good follow-up then would be, should we be focused on other things like just building?
Yeah, I'm way more positive. I mean, it sounds like everything's moving in the right direction, right? It seems like there is going to be the vote on Clarity. We hope it passes. It sounds like if it doesn't pass, it's not the end of the world. Things are still moving in the right direction. And look, at the end of the day, we're a lot better off now than where we were, 2 years ago. So I like the direction that things are going. This would clearly be huge if we did get it passed. But I mean, also, get back to building, right? I mean, if you're building in this space, like build better stuff, I think that there's the opportunities like endless in crypto, especially on Solana, right? Get building. Let's go.
The little sort of degen voice that I have inside me is saying, look, you were pretty optimistic when the odds of it passing in 2026 were at 30%. They are now at 22%. So if you have any conviction, you're probably going to throw some money at that. But that is a decision that I will take after the stream. In the meantime, I would like to bring on our very own senior journalist, Finn Miller, because we have a lot of news to get through. Solana Weekly News, as you all know, as the top 6 stories shaping both the Solana ecosystem and crypto more broadly speaking. So Finn, GM, sir, welcome. Happy Friday. How are you feeling?
GM fellas, happy Friday indeed. Look, I feel like you've been stitched up a bit. It's a pretty terrible trait to have Rebecca Rettig pop off the stream and then just have me come on.
Come on.
It's a much more low signal chat all of a sudden.
Don't sell yourself short.
So much alpha to get through. 6 absolutely banger stories in a seemingly quiet week as far as the news cycle goes. But actually, if you dig a little bit deeper, there's so much drama going on. From rewards campaigns to hedge funds blowing up, half of the Korean stock market traders getting liquidated and then getting liquidated again, going the wrong way. So there's really some shenanigans happening. Let's start with a very high level read What's your sort of vibe check? And then I'm going to open I'm going to open CoinGecko here to look at some prices. We don't have anything too crazy over the last 7 days, but I do want to talk about why prices are stagnating in the crypto markets when stock markets and memory stocks in particular are trading extremely volatile.
Yeah, look, it's been an absolutely bonkers week in markets. I think we haven't seen this for an extremely long time. Obviously, everyone is hyper fixated on situational awareness. Poor Leo was leveraged up to his eyeballs with a stupid amount of money, and Citadel has hunted him down, wiped him out, bought his book from him. So absolute carnage in the markets, and the poor Koreans got carried out on a stretcher through all this. Look, and then this morning, everything bounced back up and is now starting to dump back down again. So obviously the pain isn't over. The leverage is still very thick throughout all the markets. And we're waiting for the dust to settle, but the damage hasn't been fully done yet, I think, is the clearest read that I would give on it.
Yeah. Yeah. I mean, it was hard to avoid the news of Leopold going broke, going under. So I feel like some of that kind of like, I thought more of that was going to trickle over to crypto than it did. I feel like we held up pretty well comparatively. Like prices aren't great, obviously, but I mean, it could have been a lot worse if it was a real like full de-risking event, right? So I feel like crypto did pretty well there. I mean, we had the Fed meeting, right? So the rates did not get hiked, but it seemed like there was some dissent there, right? So some people were calling for a hike, even though they didn't. Which doesn't, that leads to more uncertainty in the market. Obviously, kind of the war is back on, so there's more uncertainty as well. Like we just need a break, right? We just need like a god candle on Bitcoin and like some good news to get it going, right? It seems like the bad news isn't hitting crypto as hard, which I think is a good sign that we're holding,
It is,
even though there is bad news. But
it certainly is.
The
I
real
mean, think about the trillions of dollars of price swings, market cap swings that have been happening both in oil futures over the weekend, following one military operation or a single, tweet or a truth social by President Trump. And then you look at the sort of crypto prices and how they've held up. I think that this resilience really tells one of two stories. One is that we've hit the rock bottom and no one's really willing to sell at this point. This is basically the bottom upon which we build. And another one is that crypto sort of decoupling. I think it's more the former than the latter. But if you look at the price performance of Bitcoin, for example, over the last 30 days, we're up 8%. And over the 7-day period, it's relatively flat. I mean, a 2.3% swing over a 7-day period in crypto is rounding error. Ethereum's doing pretty good as well, up 19% on the month. We scroll down to Solana, $73.5. Not bad. Very much flat on both the month, on the week, on the day. And we see something very similar with the total crypto market cap as well. So honestly, nothing crazy to report. Hyperliquid trading at $55, I think is quite interesting, down from around $75, despite perps volume going up, despite open interest holding very steadily towards the top. And by the way, we will be talking about Solana's perp scene in just a moment. But honestly, I think the fact that it's nothing crazy on the crypto price action front makes me feel comfortable, because again, half of Korea was leveraged up to their eyeballs, along with Leo, who got liquidated or had his funds sort of taken over by Ken Griffin and Citadel, it appears, who, by the way, now is on a helicopter to his yacht. Interesting things are happening, and it seems we are somewhat sheltered from that volatility. So I don't know, that gives me comfort. And then I add to that the sort of fear and greed index not quite being in fear anymore. I think it's somewhere between fear and medium, if you will, right? Neutral. I think it's about 40 now. 50 is where we'd like to be. But curious what you guys make of that price action not quite being as crazy in crypto land as it is with equities and futures.
So there's a lot to unpack there, and there's a few points I want to harp on specifically. One is that the massive liquidation cascade that we've seen in the AI trade is very much an isolated event. So even though we've got billions being wiped out over there, the SPY 500 is only down about 3%. So there hasn't actually been that much damage. The Mag 7, all the hyperscalers, they're actually holding up incredibly well. So we're not actually staring down the barrel of a entire stock market collapsing before our very eyes. As you mentioned, crypto is holding up incredibly well in the midst of this sharp tech sell-off. Often these things are very intertwined. People see tech stocks, people see AI stocks crash, and that automatically just overflows into crypto. That hasn't happened again. We're still holding it very strong, so that's encouraging. Wildcard, Ethereum's looking great. Ethereum's doing well, and I still have this belief that if Ethereum is in a good position, that gives all the other alts down the line permission to actually move. You know, it's despite all the jokes you make about Ethereum, it's still the second largest crypto asset in the world. It still commands a huge amount of influence and a huge amount of TVL and liquidity and capital flows. So if Ethereum is looking good, then downstream of that, everything else looks good. And my final point I want to touch on here is that I think Clarity is being priced to fail. So even if I think Clarity doesn't get across the line in the next few months, the polymarket odds suggest that if people are ready for this, people have priced in the impact of Clarity not going through. So even if we do get some headline saying it's not going to happen, maybe we just take a small 5% hit. I think there's more upside than downside there regarding Clarity. And the final thing on that as well is that all bull market, we were waiting for a blow off top that never came. So there's also an argument that throughout this entire bear market, we're waiting for some final capitulation event that is just never going to come either. And a whole lot of people who are waiting for a 50K Bitcoin are going to be completely sidelined when we just start grinding up even steadily. So ultimately, very solid. Yes, TradFi markets are completely over leveraged, and there's probably still going to be a bit of sweeping cleared out there. But I think crypto is looking in a really good position for the first time in probably 9 months or so. Thomas, feel free to pick any holes in anything I've said there. What's your angle?
No, I think I broadly agree with what you're saying. I mean, we want ETH to do well, right? The fact that ETH was doing so bad was just like a massive drag on the market. So to see it do better, I like that. Obviously we compete with ETH, but you know what? Like at the end of the day, we're all in crypto and we need it to do well. So to see that go up, I'm happy with it. My mindset goes to, okay, what's it going to take to actually pump these coins, right? Like what gets us to the bull market? We're seeing prices not go down as much. So what's it going to take to get it up? Is it going to be, do we need the AI to crypto rotation? That would be awesome. Are people going to be seeing crypto as a better asset class for movement versus AI stocks where they're looking pretty toppy, right? You look at those charts and those charts are just insane. So I think crypto is looking pretty good here. What is it going to take to really move the prices? I still don't know. Like, I don't know what the event's going to be. Is it going to be another deleveraging event and then everyone moves over? I don't know. Obviously, I think we're looking pretty good. We're in a good spot, like fundamentally, and everything looks good, but the flows just need to come through, right?
Hopefully it's not a massive negative catalyst that, forces capital back into crypto and more sort of risk on assets. I would love to have just a string of positive events that push the total crypto market cap back towards $4.5 trillion. And then, people like Bitmine's Tom Lee ideally not being down multiple billions. Saylor posted, I think, was it an $8.3 billion negative P&L? And I think 12 months ago, the quarterly P&L, or the sort of overall P&L was up $11 billion. So we're talking about a $20 billion swing. And this looks bad, right? If Saylor and Tom Lee are out there saying, look how much money we're making, look how much money crypto's making, then people naturally pile in. I think that's basically what happened with massively over-leveraged Korean traders as well. So again, we're hoping something positive. And with that, let's switch our attention over to Finn's delicious newsletter. If you haven't, by the way, go to solanafloor.com and subscribe to this. You're going to get so much value. It's free. It's every week. There's 6 stories, but then there's a whole lot more alpha in this as well. And a very quick reminder that JTX is now live. This is a sort of professional trading platform. I think it's something that Solana has needed for a long time. Jito has finally launched this. Disclaimer here as well that SolanaFloor is a subsidiary of the Jito Network, but this is really worth mentioning here. They've got functions like smart fills, which really elevate the trading experience. And you can see us actually testing this on live streams every Wednesday at 11 a.m. Eastern time. So go to JTX if you haven't already done so. Great trading experience, honestly. Finn, do you want to give us a quick rundown of the intro to your newsletter, which is often very spicy? I feel like you haven't really taken too many shots at people this week, but there was a massive opportunity to definitely taking shots at people.
I don't like to take shots at people who are down $45 billion generally. So,
not just. I think his overall exposure was 4 times that, wasn't it?
Well, that was the leverage, right? So even though the funder had 45 billion in AUM, the amount of capital that he was moving through the market was closer to 250 billion. I think he's honestly though he's still actually up at the end of the day, and he's on his honeymoon now, so hopefully he's having some reprieve. But look, we won't talk about poor Leo too much. Ultimately, chaotic week. Financial markets have imploded and revived in the space of probably 24, 48 hours. Leo, obviously, actually an ex-FTX employee, so this is something that might be quite familiar to him. And actually, this whole 40 chess move reminded me very much of CZ leaking the FTX balance sheet and then saying he's going to acquire FTX a few days later. So there's some parallels there as well. But moving away from TradFi markets, obviously, exciting days in Solana. SIMD 0286 has been implemented on chain. And I think people are understating how important this is. We're getting a 66% boost to transaction efficiency and the amount of transactions we can pack into every single block. So that's huge. And I think people aren't giving that enough attention amidst all this chaos that's happening this week. Otherwise, Morgan Stanley is joining the Solana ETF race, and Phoenix is enjoying a blistering return from the ashes. Their volume is up 559% on the week. But obviously, there's a catch, so we're going to dive into that. Shall we crash on straight through?
There is a catch. Let's dive very quickly into story number one here. As you mentioned, I think the 66% figure is somewhat understating how massively important this development is and certainly could be. So Solana, for context, raised its block limit from 60 million compute units to 100 million. Doesn't sound that crazy. That 66% increase in essentially how much can be packed into every single block. If you think about how Solana is and always has been a high performance, high throughput chain, this makes total sense, and it's been a long time coming. Now, this SIMD was originally authored by Jito Labs co-founder Lucas Bruder, who we've had on SolanaFloor multiple times. Great speaker. So I'm happy to see that some of the technical work happening behind the scenes, which Jito has authored many of these, is continuing. And a reminder here that SolanaFloor is a Jito Network subsidiary. But Finn, a couple of extra points that I want to make here as far as broader context go. Alpenglow and Agave 4.2 are also sort of coming soon, if you will. And from a technical standpoint, I think these, when you combine them all together, it's an immense set of developments, right? So you've written this from a fundamental standpoint, sort of quoting you here. Solana has never looked better. But again, you wrote it. So why don't you start us off with why this actually matters more than just the numbers?
Look, so as you mentioned at the top of this conversation, this SIMD in principle says that each block can now fit 66% more data inside it. So that's 66% more transactions, that's more trades, that's more any kind of idea that you can have on blockchain going through within the same amount of time, right? So essentially we're fitting in more information, we're packing through more transactions, and we're processing more data, more trades, and it's absolutely cooking in terms of what the chain can grow to. Around a year ago, we were at 50 million compute units. Now we're to 100. And compute units basically just measure the amount of resources that get used by each transaction. So that's the first thing. Tremendous to see this finally hit the chain. And already this is being felt, I think. If you look at this graph here, you can see that there are several blocks going through every epoch that are actually breaking past that former barrier at the 60 million CU limit. So we're already making use of this extra space. This wasn't a theoretical thing that some guys talked about and then put on the chain. This is something that was very much needed and under a lot of demand. So that's the first thing. Otherwise, like you mentioned, we've got Alpenglow and Agave 4.2 coming through. This is going to bring transaction finality down to 100 milliseconds. It's going to lower validator operation costs as well, so that's fantastic. And Agave 4.2 is also going to bring down that slot time to 200 milliseconds. So all that combined, we're getting more data in transactions, we're getting faster block time, we're getting faster finality, and essentially the fastest chain in crypto is only getting more faster, it's only getting more scalable, and it's just incredible progress. You think already we are at the cutting edge, and we're just pushing that boundary out between us and every other chain even further. So very, very exciting stuff. And there's even more, right? We've still got two more SIMD votes that are going to reimagine Solana tokenomics as well. So there's a lot to unpack there. I think, as you mentioned, at a fundamental level, Solana has never looked better. Price is going to do what price does, but there's never been a better time, I think, to start building applications on Solana because the network has never been more performant than it is right now. And a year from now, it's going to be achieving even greater highs. So look, if you're still on the fence, come start building apps because there's never been a better time to get involved. Thomas, have I missed anything there? I feel like it's very encouraging. Do you think that this translates to a reality for a lot of people? Are you noticing that you can do more on chain at the moment following this?
I mean, I don't really notice more. Like I wish that I could, right? Like I love that this is available. I love that they did this. Like I'm feeling the IBRL that they're pushing everything forward on the chain and like moving quick. And I've been watching. You can go to ultrasoundsol.com and you can actually watch the blocks and like how many compute units are used. So that's pretty fun. We watched some that were in like the 75 million to 80 million. But like what I'm thinking is what is the key unlock here, right? More transactions. I don't think transactions was necessarily the bottleneck, right? Is it are we now allowed to do more complex transactions that weren't of that they were the bottleneck before and this has unlocked that, or what's like a good example of what can be done now, Finn?
I think there's a lot more composability that comes from this. I think, like you say, packing in more transfers is very easily done. That's an incredibly low resource intensive activity for a blockchain, and we can do millions of those. That's actually been proven by Katie from Temporal. You can actually really ramp that up to 1 million transactions per second if they're simple transactions. But no, this, like you said, this allows for a lot more complex transactions. So with things like a burgeoning perps ecosystem being led by teams like Phoenix, with more prediction marks coming on chain, and then obviously adding that composability layer, the complexity and the richness and the variety of the apps we can build on chain is only going to grow. So this is why I think, to your point, the evidence and the experience isn't that different now, but fast forward in a year's time, the variety of apps is going to be a lot broader, just given by what this allows us to do. I think is the easiest takeaway.
Yeah, that's awesome. So the devs are no longer have a blocker, right? So they can build more. They can build in more complex contracts. So I like that. I mean, anything that we can do to help the devs build, and I mean, Solana's the place to build, right? So to make it easier for people to build, that's what we want.
Tangent here. You mentioned ultrasound, and honestly, just as a word, gives me the heebie-jeebies. Really, like it's obviously great what's happening. I think very, as we agreed, it's a very underrepresented form of growth and development here. But if we think about what ETH was supposed to be, right, there were ultrasound money, and it was going to be deflationary, and we're looking at like trillions of dollars of market cap potentially just for ETH, and it failed miserably. We are not there. In fact, despite the merge, ETH remains, I think, 0.8 to 1% inflationary. And this idea of soundness of money goes all the way back to the Bitcoin white paper, right? Which we said limited supply eventually aims to be deflationary, so on and so forth. Sol doesn't quite have that characteristic, that quality of soundness yet. Sorry for going on a rant, but I just really, when people say ultrasound money, really, my skin sort of, crawls a little bit. Should Sol be pursuing this strategy of deflationary tokenomics? Should we do it more aggressively, try and be deflationary? And I think, having learned all the lessons from Ethereum's failures, should we maybe find a new term and not call it ultrasound or ultrasound money or soundness, but should we come up with a new one?
I think we should. I don't think that we should, push for a deflationary money, but I think improving the tokenomics is going to go a long way, right? I think that some of those new SIMDs that are coming out are going to, lower the inflation, burn a little bit more SOL when there are complex transactions like this. So I think that they're addressing that. I don't I don't think you can go back for the ultrasound money. Like I just feel like that was just cringe from the start. It was
I
ETH
know.
for a
Let's
couple
call it
years,
something else.
burning
But
fees. And I think the problem with it too was like, you cheer on a $20-$30 transaction fee where it's like, that is just terrible for people, right? I actually saw something on the timeline where people were like, okay, with these SIMDs, Solana is just going to turn into ETH. But I don't think that's the case at all, right? I think we're
Gee,
talking
no.
about moving the transaction from like 0.0005 cents to like 0.007 cents, and maybe some of the more like heavy transactions being a little bit more, but it's nowhere near the dollars and 20, 30, $100 that we saw with ETH, where it's like that was an interesting time where I was sitting there like, why are these people cheering this on? This is net negative for everybody. Why are people paying so much money for an ETH transaction? So I don't think we'll get there. Finn, what's your take there?
My argument against that is that even if transaction fees do trickle up through this new resource intensive manner, they're still going to be negligible to the average user.
Yeah.
You and me and someone who's just doing something on their phone or on the computer is going to be unaffected by this. And Solana's proven that it iterates very fast on these things. So if we arrive in a circumstance in which transaction fees become too expensive, then all the smartest devs in the world are going to put their heads together and find a way to start bringing that cost down again. The idea is to go for scale, not to make things as expensive as possible. Solana is going to continue to improve at a pace that no other blockchain can match. So yeah, there will be problems, but we will find solutions to those problems as they arise. We'll cross those bridges when we come to them.
Yep.
Yeah, and I mean, if you look at it too, right, when we're seeing all this meme coin volume come back in the trenches, you pay a lot of money for transactions, right? You know, they're agnostic to any sort of fee as long as they can get their transaction in the block and get it executed at, you know, a relatively good price. They're paying a couple dollars per transaction. I think FOMO has a 1% fee plus a dollar fee per transaction, and they've got a lot of users, right? So people are using that and they don't care. So, you know, there's that side of it. And then the other side where, you know, people care about every cent when they're making a big swap. So, you know, there might be some people that are sensitive to it, but I don't think people will actually see the difference that much.
Yep. Don't know if you guys saw that, but interesting comment came through from Moonship ETH here. Where did all the ETH gas money go, ripping people off for years? I think
it got burned. Moonship ETH. It's sitting in the burn address. You know, it was used to make sure that the chain was running. That's what happened.
Yeah.
At least it didn't go to a person, right? Like, well, apart from, you know,
there you go.
Back in the day, but yeah.
That's one side of the argument. Yeah. So in the interest of time, we do have to move on to story number 2. As you can see here, the headline is Morgan Stanley's MSOL debuts with $19 million in trading volume as Solana ETF wars heat up. You know, from the last story, the last headline, we know that if you think about Solana as a high throughput chain, essentially the road is getting wider. And now story number 2 is basically saying some of these massive multi-billion-dollar institutions are showing up to drive on it. The question that we often ask here in SolanaFloor is when and how. How many of them are going to turn up? How many cars are they going to bring? Very shallow analogy, but there you have it. So that's the headline. And what we love about the headline is that at first glance, MSOL, this new Solana ETF, is going to have the lowest headline fee in the category at 0.14%. They're going to have staking from day one. And correct me if I'm wrong here, Finn, but 95% of staking rewards are going to go back to the investors as well, right? So you'd expect this thing to land with a splash and generate plenty of demand. This is where I'm going to caveat what I'm saying, because it did indeed land nicely with $19 million of trading volume in day one, as you can see in the headline. But I think it also coincided with a day of net outflows, right? So Finn, give us both sides of the story here, please.
Yes. So the most exciting part, obviously, is that Morgan Stanley's SOL ETF has hit Wall Street. It's been listed on NYSE Arca. And this is fantastic just because, quite simply, I think there are around, I want to say, 16,000 advisors on Morgan Stanley, and they oversee $7 trillion in client assets. So, look, this is a huge amount of capital that, you know, now can access Solana in ways that they weren't able to before. Obviously, tremendous. You know, we love seeing we love seeing the TradFi giants and the biggest financial institutions in the world start embracing Solana in this way. So that's fantastic. As you can see, the market obviously liked this. They liked this lower expense ratio. I think there is a slight caveat on the staking rewards, because one of the things that is mentioned there that you mentioned, Jack, was I think 95% of staking rewards. They're trying to stake 95% of their SOL, I believe, is the mechanic. That's kind of table stakes. You know, for me, I think everybody is around that 95% mark, aiming for 100. Everyone's aiming for 100. I think Bitwise is at 97% at the moment of all their SOL being staked. So look, that's table stakes. And 21 Shares is actually running a fee waiver for the first year. So there's that as well. Eric Balanchunas said that this is one of the biggest things to happen to the Solana ETF race since they first launched in October. And I'm inclined to agree, because Morgan Stanley is a very big name there. But, you know, despite that, we are looking down the barrel of 2 straight months of outflows, I believe. So, you know, after a tremendous start, the Solana ETFs are starting to cool off a wee bit. I'm not concerned by that, to be honest. I'm not too bothered. I think that these assets are now very accessible to everyone. They're going to have their ups, they're going to have their downs, but ultimately, I think we're going to continue to trend up and to the right in terms of adoption. So, look, I think it's just encouraging in any case that more issuers are stepping up to the plate and offering these assets. Thomas, obviously over in the US, you're a lot closer to this. You know, having someone like Morgan Stanley put their name on this is probably a much bigger deal for someone like you than it is for me and Jack over here in Euro-poor territory. What's your gut feeling about seeing a name like Morgan Stanley embrace SOL like this?
I think it's huge. I think it's a big week. So What I think a lot of people underestimate is like tax advantaged accounts where you can buy crypto in, right? So like, a lot of the US are retirement accounts, are 401k accounts, IRAs. You can't, like, historically you couldn't buy crypto in them. Now you can buy ETFs, right? So when Morgan Stanley holds your 401k, not only do they now offer a sole staked ETF, you can buy it in your Morgan Stanley retirement account, right? So I think that's big, and I think a lot of people are looking for a couple percent of something that could really run, and I think that Morgan Stanley now has the incentive to be selling this product to their clients, right? So I think this is big. I think we're seeing some shots fired at Bitwise, and maybe we see our guy Matt Hogan shilling Solana again. Come on, man.
It's been a
Um,
while since
yeah,
seen any
yeah.
Matt Hogan Solana bull posting on the timeline, which I think is a good reason for us to reach out to him and bring him back, either on
Yes.
an episode of The Big Picture where we talk about all things macro and crypto and the intersection of it, or maybe we bring him on for an episode of Solana Weekly News and talk about why all of a sudden they've started talking so much about Hyperliquid and Hype as an asset and not so much about Sol and Solana, because yeah, it's a little bit heartbreaking, to be honest. I feel a tiny bit betrayed.
He could also come on to trading floor. I mean, if he wants to pitch a trade, he has an open invitation. One more thing that I wanted to bring up about the ETFs and like why I like this. So on trading floor, we had Squid on, who runs Proof Markets, awesome, big trader. And something he said is, he trades on flows, not fundamentals. We talk about the fundamentals of Sol and Solana and how bullish they are, but focusing on the flows and like where the money can potentially be coming from, this opens up a pretty big like valve for where the flows could come from. So I'm excited about this. Like that's stuck in my mind to like watch the flows, and it's like once you have to like resort to looking at the fundamentals, you're like grasping at straws for a narrative, right? Like you just want to see the flows, you want to see something ripping. Once Solana starts, once we start seeing meme coin volume pick up and all this, it's like, all right, the flows are there, the use is there, everything's kind of coming together. And I think that's what leads to price action. So it's
Absolutely.
exciting.
I would take the opposite argument, Thomas, to be fair. I
Ooh.
would say that fundamentals lead flows. I would feel like flows come after fundamentals have proven a reason for flows to start in the first place.
Agree to disagree. I mean, I it does. I can see that. I can see that. But I mean, it's if you just look at the flows and the flows aren't there, the price isn't going to go up, right? We need more buyers than sellers. So whatever can bring those buyers to the table is going to be what moves it. But what's going to lead those buyers to the table might be the fundamentals, right? So it could be the chicken and the egg.
Yeah, it's a reflexive loop. Well, that's something we can agree on, I think.
I think we're looking for logic where there exists none, i.e. crypto. But for anyone who's interested in historic ETF flows, you can go to SolanaFloor.com, and we have a beautiful graphic visualization of all of the Solana ETF inflows of outflows. You can see here on screen that what coincided with the $19 million in first day trading volume for MSOL from Morgan Stanley is, of course, the $18 million of outflows on July 28th. And you can track all of this on SolanaFloor.com. It's a great resource. Again, it's free. So go to SolanaFloor.com and you can find it all there. In terms of flows, another thing I want to mention is we talked about the highway and the roads. Let's also talk about the plumbing. So essentially what's happening here is that the plumbing is being built. The water is going to flow eventually. I think chicken and egg argument holds up very strong to Squid's point. What he was saying, I think, is some of these lower cap tokens, maybe fundamentals aren't really so much the leading indicator, but flows are. So he's saying that he's made a lot more money trading on attention and flows than simply looking for fundamentals in crypto land. And I'm sure if you try and extrapolate that to TradFi, you're probably going to lose a lot of money because professional traders with Bloomberg terminals that cost $20,000 plus a month have a massive edge on information flow compared to the average retail trader. So that is your warning. Now let's switch over to story number 3 here. This is a very interesting one because for weeks we've been talking about MetaDAO, about futards, about ownership tokens, and how it's been a bit of a shaky period of time. Thomas, this is sort of your area of expertise, if you will. Our listeners will remember that you actually attended a MetaDAO meetup in the US, I want to say a couple of weeks ago. So curious what your take on that is now that things are once again moving in the right direction. But Finn, let's start with you here. The headline is MetaDAO ownership coins return to spotlight following strong ICOs, and they have been great indeed. You can see here on screen that we had Ripcars, Credible Finance, and Lasso Finance, but these are just 3 of the examples. There's a long list of examples that have gone exactly the way that people wanted them to. Massive amounts of oversubscription as well. So to me, that says people are either sidelined or they really want something to deploy their capital into. And Futaki, ownership coins, whatever you want to call it, seems to be getting some of that attention. We love to see that it is now reversing that slightly negative trend that we observed a while ago. Finn, give us the TLDR.
Yeah, it's been a fluctuant year for MetaDAO. I think obviously there's been the range liquidation earlier in the year. There's been the Zinc and the ZKL Sol debacle from recent weeks. MetaDAO has brushed that aside. The projects coming out of MetaDAO at the moment are performing incredibly well. The market is rewarding them. Investors who are going into these ICOs are reaping the benefits because these products are doing incredibly well. They're all generally revenue positive, they're cash flow positive. And the model means that investors are protected in ways that they are not protected in other tokens that have, a token equity split. So look, MetaDAO, we've been critical of MetaDAO in the past, but we've also accentuated that there is a lot of philosophical weight behind this, and it's bringing ownership to the people. It's delivering one of the fundamental tenets of crypto in a way that nobody else has really done. So well done to everyone on MetaDAO who's reaping the rewards of these ICOs, and well done to the teams raising there
and the traders
as well.
Probably worth mentioning. Meta is up 39% in a month, and one of our trading floor guests, who I think it was Squid, if I remember correctly, had a very successful trade, essentially capturing some of the upside on this reversal of momentum and optimism around MetaDAO. So congratulations to him, but this is there also your reminder to tune into Trading Show every Wednesday, 11 a.m. Eastern. Plenty of alpha from some of the top traders in Solana land. But continue.
Yeah. And even beyond the curated list of MetaDAO projects that they vet and they make sure that it's all completely copacetic, even the permissionless launches are starting to do well. So Order Trade, it's an emerging order book DEX on Solana. They hosted a permissionless raise there. They were trying to get 150K, and they've received over $9 million in commitments. So
insane.
People are wanting access to ownership coins. People want to get in at the ground floor of these assets. And there's that protection level, as we've seen. If people don't like what the team is doing, if they don't have faith in the team to execute on their vision, they liquidate the treasury, and you recoup a lot of your funds essentially. So sentiment towards MetaDAO is very good at the moment, and they just got listed on Upbit, so everyone loves the Korean pump. Thomas, you were on ground over at the MetaDAO meetup very recently. What was your biggest takeaway from being there? Could you feel a change in the perception of MetaDAO, just being on the ground there? What was the vibe like amongst the futards?
It was an interesting vibe. It kind of seemed, I didn't really understand what it was when I was there. I was like, why are these guys selling MetaDAO right now? But it was, they were really like reframing, what their focus is, right? They kind of went through like, look, we started with Futarki. This is where we come from. Now we're really focusing on ownership coins and crowdfunding. And I mean, if you look at the results of, what they've been doing recently, it's working, right? It's aligning investors, users, teams, where crypto struggles with that, right? Like ICOs have a great product market fit. You look back at some of them, they were very successful. You look back at 95% of them, there's a lot of scams and rugs, right? Where, my view is like, I wish that we didn't need MetaDAO to like give a framework on how to not rug your users and investors. But it's crypto, and there's been so many bad actors and teams that have run away with the money that you almost need guardrails in place. So I think because of that, I'm incredibly bullish on what MetaDAO is doing, right? I want access to early stage companies. I want access to teams that are willing to work, because there's a lot out there that are, right? And, for them to be focusing strictly on their token and how to properly do it and how to not rug their users, that's like a big burden for any of these teams, right? These are early stage teams that they just want to get to work, right? They want to build cool products, they want to use them, and they want people that are aligned with them. And they've come up with a good framework for that when it comes down to it, right? And you can see it in the way that a lot of these tokens are trading for these teams, right? The teams that were there that were presenting their products, they're awesome, they're dedicated, they're hardworking guys. And it's like, it just makes sense. Like, hey, this is a great framework. Launch your token this way, raise your funds this way. And you know what? I like, when I think about it, it's one of the most bullish things that I can think of for Solana, because Solana is the app chain, right? If you're a builder on Solana, you want to come to Solana, you want to have a business, you want to create revenue, and you want people to join with you, right? And it seems like a very hard way to do that. And then there's way too many tokens on Solana. Most of them go to zero. This is a good way. It's not perfect, as we've seen. There's been some hiccups along the way, but I'd say in general, like, I'm incredibly bullish on the direction of it. I think it's a great solution, and I think it's only going to get better, right? They see these hiccups on the way, they make adjustments, and if I was a team looking to raise funds, I would go through MetaDAO. I think it's exciting. I think it's one of the most exciting protocols or ideas in all of crypto right now because of where we're at in Solana. So
it's got to
I
be
don't know.
good validation as well, right? If you're a founder or a founding team, and then your ICO is massively oversubscribed. I mean,
Yeah.
Finn, you gave some of the numbers there. That's got to be a good confidence boost, I think, as far as how much upside or opportunity or potential the community, the Solana ecosystem sees in your project. So the fact that we're seeing this across multiple verticals, so many different projects, I think, again, to your point, TB, is very much a signal of where Solana is as an ecosystem right now.
I read a really good tweet the other day that was saying about how with the AI proliferation, everyone can be a founder now. So we're going to see a huge uptick in the number of solo founders trying to build these unicorns in their bedrooms. And, that's going to happen. That's obviously, there's going to be a lot of great businesses that come out of this. But if you are a solo founder, it is incredibly difficult to build trust. So I think MetaDAO is one of these platforms that puts a trusted layer between solo founders and, the capital markets themselves. So I think, the sky's the limit for MetaDAO if it gets continually easier to start building companies as a solo founder. So, hats off MetaDAO. Well done. You've done well to earn your position here, I would say.
Absolutely.
Yeah.
All right, what do we have now? Story number 4. Speaking of earning your position, so little bit of controversy here. There's a $420,000 rewards program. What we do love is that Solana, for a short little while now, has been competing very aggressively in the perps scene. Again, one of the highest growth verticals in all of crypto. Hyperliquid by far leads on open interest, which is probably the core metric that people should be tracking as far as who's the leader, who's generating most interest, most trust. Open interest is that metric. But the headline, as you can see, is Phoenix fronts $420,000 in rewards as Solana records all-time high in quarterly perps volume. So congratulations to Phoenix, and congratulations to Solana for having multiple perps venues in the race. We have covered Solana's perps scene very closely. And something that you might not know, if you have already started trading with JTX, is that perps will pretty soon, I think in the coming months, maybe even sooner, be live through Phoenix on JTX. So JTX is really moving towards this comprehensive prosumer trading platform approach. Finn, what's going on here? Because people were a little bit frustrated about who's actually getting the rewards. I believe some people were quite frustrated that KOLs were prioritized as opposed to users. But talk me through what's happening with Phoenix. Talk me through the $420,000 rewards program, and then let's talk about why people are once again frustrated.
Yes. So the very first point is that I think there was a bit of a misunderstanding between frustrations of people getting higher KOL allocations and higher referrals. I think that's been debunked by the Phoenix team, so I'll address that first. But look, broad view is Phoenix has launched Flight Club. This is going to last for 28 days. They're going to be distributing 420K amongst their eagerly devoted traders. It's going to be 15K every single day. And it's based on, the standard things. It's based on your volume. It's based on your open interest and how long you hold your position open. And obviously, they want to reward people who turn up every single day. So if you're trading every day, you build up a streak, you get more rewards. And look at this chart. It's very evident it's working for them. The volume is up 559% on a weekly basis. It's brought a lot of people back to Phoenix. I traded on Phoenix a few months ago. This is something that brought me back to try it out again. And there's a lot of great new features that make it worthwhile. So, even if you could argue that they're giving money away to attract users, and then once this campaign ends, these users are going to disappear, I think it's still quite sticky. The product is getting better. People are seeing that. And ultimately, with this influx of users, they're actually making more in revenue than they're giving away with the incentive. So there's the W there as well for Phoenix. Again, a lot of the concerns around where the allocations are going, and they're saying that it's KOL weighted. I think that's untrue. I think Kabir and the Phoenix team have debunked that, so I wouldn't read too deeply into that. But ultimately, Thomas, have you dived back into Phoenix since this has started?
Yeah, I have. So, I mean, I don't do much perps trading, but I mean, I saw those incentives and I went back to them. So I think I am aligned with a lot of other people doing that too, right? People love the incentives. I think in general, I'm probably not a profitable perps trader, but I could break even. And if there's a little incentive for me to break even on a different perps dex, I'll go use it. You know, I still, it seems like they're kind of still sticking to not having a token. Whereas like, you know, I don't know. I still think that was like the big growth leverage that that Hype had, right? Was their ability that they had that token, they airdropped it to so many of the users, it just crushed because of that. So I still would like to see them have a token, but it seems like they're pretty against it. But they found a way to still give out incentives. Who they went to might be questionable, but it seems like offering incentives is a net win for them because they're making more money than what they're offering. So, so why not? You know, I think that's the crypto way of incentivizing people to use it, and it's good. It's a great perps dex, right? So the more people that you get to use it, hopefully it's more sticky after they try it out. But I mean, I'm bullish overall. I can't wait till they integrate into JTX and we can start levering up on trading floor.
That's going to be very interesting to see some of the sort of professional, semi-professional traders that we've had so far. Some of the founders coming on, and the range of assets and tickets that people have shielded is already crazy enough. I'm very much looking forward to the day that you can trade some of those with leverage. I'm sure there are going to be plenty of opportunities to short things as well. Think back to episode 1, Simon, founder of Solana ID and everyone's favorite Solana ecosystem co-host as well, basically said he was short Sol. I think we're at $78, $77. So I guess he's up a couple % on that trade. But shame on you, Simon, if you are listening. Please don't ever come and do that again. Jokes aside, there will be plenty of opportunities. Yeah, no shame. Plenty of opportunities to short assets once JTX is launching, basically routing perps through Phoenix as well. What I really want to pay attention to here is Solana perps sector hits an all-time high in quarterly volume. People have been working very, very hard behind the scenes to make this a reality. Blockworks data has got this nice chart here, this visualization. You can see I think, what is it, 8, 9 biggest perps venues that are live on Solana right now. You can see that GM Trade is accounting for a significant chunk of that. There's a lot of FX trading happening in Q2 as well. But honestly, this is massive. People were complaining for the longest time that Solana wasn't able to compete or wasn't willing to compete with Hyperliquid. That narrative has been completely debunked. People have been working so hard to build these extremely efficient, easy to use, beautiful to look at perps dexes. And here we are. So congratulations to everyone who's building in the perps vertical. And I'm pretty sure this is going to continue. Now, we've also been debating for a long time here on SolanaFloor when we might be in a position to challenge Hyperliquid on that single sort of North Star metric, if you will, which is open interest. Some random numbers have been thrown out. We said 6 months, 8 months, 12 months, 18 months. I'm going to hold my estimate. I'm going to say 18 months from now, the cumulative Solana perps dex open interest will be within a 25% margin of Hyperliquid's. Any takers on that bet?
I don't want to bet against it because there's some incredible perps dexes being launched on Solana very shortly. Obviously, Bulk is one that comes to mind. There's Blink coming as well, which is going to be fantastic. I think the Flint Trade guys are working on one further along down the line. So the quality and the caliber of perps dexes that hitting Solana are going to be extremely brilliant in the coming months and years. But again, the question is user acquisition. And so far, we've seen that having a token, having an airdrop campaign, incentivizing users to come in and create a wealth effect is a critical part of actually facilitating the healthy growth of perps dex. So, there is a playbook. Avoiding the playbook is a dangerous game, let's say. I'm kind of aligned with Thomas on that if you are bootstrapping a perps dex, you do need to have a good incentive structure in place. The the real tell for me is going to be how many of these traders stay on Phoenix after the incentive ends. Now, I'm kind of convinced at this stage. Like, going back to Phoenix after having not traded on there for a few weeks, there is a lot of great new features. There's a whole bunch of new assets. The experience is very nice, and I really like this ghosting feature where you can track other traders as well. So I'm hooked for now. I hope everybody else stays hooked as well moving forward.
Yeah.
Yes.
Yeah. And I want to see like some innovations on perp dexes. Like when it comes down to it, like another perps dex isn't really that exciting to me. I think like what would really take Solana to the next level is have some like big innovations when it comes to perps dexes. And I don't know what that means. Are they listing memes quicker, baskets of assets, Pokemon cards? Like I don't know what gets us there, but it seems like the way that Solana does everything, it's like there's like a more fun way to do it, and more like a more interesting way to actually make these trades. And I'm sure that somebody's cooking something up like that. So I want to see something like that. Like I don't know, like going to go long Solana on a different perp stacks. It's whatever. The experience is great on all of them, but like what is going to really change the game, I don't know, but there are going to be some innovations there. So I'm
I
excited
think,
to see what people are building.
unfortunately, the short and boring answer is a fun, potentially gamified incentive system, right?
Yeah.
It's it's the most battle tested way of acquiring new users in this industry. And I think back to one of Hasib's quotes when he came on to talk to us in an episode of The Big Picture, and he said, "Look, non-financial crypto is dead. Long live DeFi." And DeFi is great at incentivizing people to do something new. And once you've got those users, it's basically incumbent on you to keep them there. But it's difficult for builders to just build something that is relatively similar, maybe marginally better, and then expect thousands of people to change their daily behaviors. It just doesn't work unless you incentivize them. So there you go. That's my sort of TLDR take. Now, story number 5. This is an interesting one. MoonPay's PayBox launch went viral, as you would expect it to, after free USDC rewards draw thousands of new users. Imagine announcing free money and not going viral in this economy. That would be absolutely unheard of. So in a way, this is very interesting. I'm still very skeptical of anything that has AI in it. So we're going to dive a little bit deeper into this story. Context is MoonPay launched PayBox. This is a non-custodial wallet that essentially lets an AI agent transact on your behalf. Super cool. You've got ChatGPT, you've got Claude, and you can basically connect them and say in plain language, sort of like Siri for the boomers, hey, I want you to go and do this. It's going to prepare the transactions for you. You can basically approve them afterwards with a passkey. But I think the reason why it went viral, and again, rightly so, was the free money aspect, right? Finn, talk me through both what's happening with this wallet thing, and I'm really curious to hear your take on the feeding frenzy that it created when they announced free money.
Yeah, look, MoonPay, we know MoonPay. MoonPay is one of the greatest on-ramp and off-ramp services that crypto has ever known. They're absolutely everywhere. I remember trying to buy stuff trying to buy NFTs actually with a credit card back in 2021, and MoonPay was the de facto tool there, and it still is today. So they've got tremendous lasting power, and they're diving deeper into the agentic AI economy, which is where everybody is waiting for the next big outbreak of innovation to happen in crypto. So MoonPay, right place, right time. New product, PayBox. And I think this is the most effective way, as we've seen, to get people to start engaging with a product. You tell them to sign up, you give them a bit of money, and then they've got that money that they can go and start testing things out with. I think a lot of people, there's a bit of friction when you want to test a product, then you have to start fronting up money to then test the product. It's a level of friction, and it's disincentivizes people to use that. MoonPay has gone the complete other direction. They've given us a product, they've given us some money to test the product with, and people are flocking to it. Obviously, the screenshot here says, you're getting $200, $300 just by connecting your X account and firing it up. So obviously, people are going to go for that. I saw some stats earlier. I think there's been, maybe 27,000 people have connected to this, and they've actually used the product since its launch. So a very encouraging start, I would say, for MoonPay and for this product. Yeah, there we go, 270,000. And there was some hesitancy, there was some privacy concerns. A lot of engagement farmers, as MoonPay called out in this article, they there was some privacy concerners saying that they're going to get your private keys, they're going to read all your chat history with Claude and ChatGPT. MoonPay's engineer came out and said that's completely false. Ignore that. Everything is completely safe. Don't worry about it. And look, people are using it. I think it's been a great success. Thomas, are you on board with me? Would you agree with me in the sense that the best way to get people to test a new product is to give them some play money to, throw around inside it.
100%. I mean, we've seen that time and time again, and especially in crypto. That's like been the biggest growth model that we've ever seen. And I think that you forgot to tell me that there was free USDC on the table, because I missed the alpha drop, Finn. I'm over here without the USDC, so this is no fun. But it's good to see like agentic trading kind of making a splash again. I know this was big a few months ago. I built a trader that was an agent, and it sucked, and it cost so much money to run, where I'm hoping it's a lot better now. We probably need to bring somebody on trading floor to show us exactly like what they're doing, what they're using, how they're setting these trades up. I know I was talking with Tony from MoonPay, so we'll need to book him and see. I think it's interesting, right? I mean, there is so much data that could go into every single trade, and now that data is pretty quick to get through AI, like if you could automatically use a lot of that and make some trades and somehow make some money, why not? So I still think there's something there. I think it was definitely overhyped when we were originally covering it a couple months back, but it'll get there. I think we'll start seeing some big P&Ls from some people, and then then it'll become a thing again.
Max Kaplan, you got me thinking there. I think would be a great guest to bring on. We have spoken to him in the past on SolanaFloor. He posted, it's a very long post. I'm going to read through this very, very quickly. So he's responding to a Nick Carter post who said, haven't heard about OpenClaw in months. And Max Kaplan basically said, this is wrong. People are using it. You're just not hearing too much about it. So he, in a very long post, outlines that he uses Codex and Hermes, and he's got a bunch of agentic tasks running in the background. So potentially for trading, this could be an interesting guest. We will reach out to Max Kaplan and see if he's available to come and chat to us and educate us about how he's using agentic AI sort of agents in his daily life. But aside from that, you are right that the privacy concerns, Finn, have been addressed. Now, does that mean that you're not exposing yourself to any additional risk by giving your Claude, your GPT access to money? Debatable, but not to the extent that people were basically criticizing this system for. They were saying it's going to take all your money, you're going to be hacked, it's going to be drained. Not true. Those concerns have been addressed.
Yeah, I think MoonPay is smarter than that, right? Like MoonPay is a long-standing company with great reputation. They would have considered this when they built it out. I wouldn't be too worried about, Claude stealing your private keys or anything of that nature. Maybe it runs off and it buys you something you don't actually want. Like, I think that's a possibility. And I did see some tweets about, some people saying like, oh, my new account went and bought this thing. But I think that was done, that those tweets were more like of excitement because, they told their PayBox to go and buy something and it did that. So yeah, Godspeed. I think it's a product at the cutting edge of what's actually happening in terms of agentic AI. We've talked a lot about X402. X402 is really struggling to take off in many respects. The volumes just haven't been high. The transaction count hasn't been as high as they were at the start of the year when everybody was playing around with this. So I'm happy to see more products come out that might actually entice people to start using agentic AI commerce again.
I mean, just being able to talk to a wallet or talk to an agent and get it to spend money, I think is an incredibly underrated outcome. Just you're obviously not going to be doing high frequency trading on this thing, but when Siri first came out, people were like, nobody's going to use that. Why would I want my phone listening to me all the time? Then, simple use case, people are driving and they want to be able to say, hey, Siri, call my mom. There's an emergency, something very, very simple that people overlook. So, maybe as a sort of close all of my trades because the market is nuking type of command, I can see this being very, very useful. Again, for the boomers or your boomer relatives who are dear listeners who don't quite understand this, it's like Siri on steroids, but it has a credit card and you can get it to do really, really cool things. Thomas.
Oh, yeah. So one of the guys from Delphi Digital, Tommy, I think his last name's like Shaughnessy, he gave his Hermes agent $100K and it's trading. It's like traded the Amazon earnings yesterday and made a ton of money for him. So that would be an interesting account to follow. I don't know how he's giving $100K to an agent or how like he could possibly live with that.
I hope it's testnet money. I hope it's testnet.
Yeah, but that would be an interesting one to follow. Maybe we need to reach out to him to show us what he's doing.
should be a very interesting conversation. Okay, last story of the day here before we get to my favorite part of Finn's newsletter every week. We've left some big numbers for the last story here. It's certainly not the least impressive one. Let me share my screen actually before I start talking through this headline. It's a big one. It says Hastra launches Auto, bringing $1.6 trillion auto credit market to Solana DeFi. As ever, when we see these trillion-dollar headlines, we ask ourselves, is it a nothing burger? Or is it going to be truly game-changing? Is it going to be life-changing? So I'm not going to go too far into this. There's a lot of stats here to cover. Finn, you've pulled up a nice screenshot from rwa.xyz, which is a great resource for tracking the real-world asset landscape, if you will. Massive growth that we've seen and reported on from Solana's real-world assets. But what's happening with Hastra?
Hastra is the issuer of some of Solana's best performing RWAs of all time. I think Prime was their first launch. That launched in December, and then by I think April, it had a market cap on Solana of around $363 million. So look, Hastra has got the chops. They've proven themselves before. This is a new product. The APY is higher on Auto than it was on Prime, so I suspect this is going to do incredibly well. Auto is a tokenized yield product that taps into consumer auto loans. So this is a $1.68 trillion market over in the real world. Hastra has figured out a way to start bringing this yield on chain, and I think people are going to love it. It's what I think is most interesting about this personally is that we talk a lot about RWAs, we talk a lot about tokenized stocks, we talk a lot about trading everything on chain and how that's the way to bring people on. I think we are not giving enough attention to assets like this. So Auto is a good example, Prime is a great example, Onray is a great example. These are passive products where it's denominated in USD. It sits at a very stable rate and it just ticks over, earning 7-8% yields over the course of the year. The market for these assets is huge. People don't want to actually be turning up and trading every single day. Some people just want to actually park money in assets that appreciate at a reliable rate. And this is a huge part of the RWA market that I think a lot of people just gloss over because it's not as sexy or as vibrant as something like trading tokenized equities. So well done, Hastra, for bringing another asset to the table. Prime did incredibly well straight out of the gate. I'm sure Auto will follow. Thomas, do you think there is more demand for these assets that have a stable price floor and growing yield basis? Do you think we need more of these, or do you think we should just sit with the ones we've got and grow these ones particularly?
I think anytime there's yield, there's demand for that yield, right? And we've seen that in crypto where it's like you bring some new source of yield on and there is a good demand for it. And why not? It seems like the yield's higher than others. Auto loans on the blockchain is interesting. Who would have thought we'd been here or we'd get here? I mean, we live in troubling times, but why not? People are trading this in TradFi, like why not offer that to us here? I think that there are a lot of products where this could actually unlock, a lot that they couldn't actually do in the TradFi world. Like I wouldn't even know how I'd get access to this outside of crypto, right? It is interesting, and I would assume that we'd probably see a lot more of this, right? And thinking about this, it's like I'd say right now lending rates, for stables aren't that high, right? You could probably get 4 or 5% pretty easily across most of DeFi, but this is above that, right? So I think people are looking for a little bit higher yield, and this seems to be like a pretty good source of it. So on the net, I think this is good. I like the direction of it, and it is pretty exciting. It's funny to say that there's auto loans on the blockchain, but
yeah, I'm most interested in seeing this sort of vaulted up and packaged and basketed and bucketed with other assets into sort of curated investment opportunities, if you will. As Finn mentioned, just people wanting to park assets, seeing those numbers, steady appreciation. That's what I'm most interested in from a personal perspective. From a, I guess, more broad Solana maturing as an ecosystem perspective, Thomas, I will echo what you said, which is that having these super long tail assets, things that we didn't even know we had access to in the real world, and now we don't even know how to access them anywhere other than on Solana, I think is a really, really good sign of the direction that Solana is moving in generally. Now, if you do want to find out more, of course, you can go to SolanaFloor.com and read the article. Towards the end of it, there's this interesting section here. According to RWA.xyz, asset-backed credit and specialty finance tokens like Hastra's Prime, Onray's ONYC, Humus PSD, equate to over $777 million in TVL. That's 21% of Solana's total RWA market. That is fascinating because we talk so much about equities on chain, stocks on Solana, stocks on Solana. I'll repeat, stocks on Solana. It's so much, right? I mean, we love Seraphim, but there's so much attention being placed to equities on chain that we forget that actually real world assets are a very, very broad category. So I urge you to go and check this out. Some very interesting statistics coming out of it. Now, with that said, let's get to my favorite part of Finn's newsletter. Every week, Finn has this beautiful section towards the end of it, which you should be familiar with by now, the honorable mentions. Once in a while, Finn will bless us with a dishonorable mention as well. I see that he hasn't done that this week. But before we get to the state of Solana in a tweet and the stat of the week, Finn, would you like to take us through the honorable mentions?
This week's honorable mentions. Korean fintech giant KSNet signs MOU to bring Solana Pay to 330,000 merchants. Bolt Trade launches BIP1, enabling deployer-owned perps markets. Camino launches Pax G Market, facilitating the collateralization and borrowing of gold. Bonk launches Bonk Play, an on-chain casino. Orca introduces Auto Compound, allowing LPs to automatically reinvest capital into positions. Jupiter reports $25 million in gacha volume since its July 15 launch. Anza publishes paper outlining Alpenglo's quantum-resistant design. Alpha AI launches Iris, an intelligent stack for AI agents. And Xstock's AUM crosses $600 million. Good list. Jack, what's standing out?
You know, at first glance, I thought Bonk launching Bonk Play and on-chain casino was going to be the winner because casinos generate so much revenue. It's insane to think about just the marketing budget that some of these online casinos have. And you know what? If people are going to gamble, I would like them to do it on Solana. That's me being selfish. But I'm actually going to go with Xstock's assets under management crossing $600 million because stocks on Solana. What do we want more? We want more stocks on Solana. We want more assets, real world assets in general being on Solana. So I'm going to go with X stocks. I suspect that number is going to continue going up and to the right unless we have a massive blow off top in sort of equities across the board. But X stocks for me. Thomas, what do you think?
Yeah, I'm going to go with quantum resistant Anza. I feel like that's awesome. I feel like that's a pretty big step, right? I feel like that's like a pretty big hesitation by a lot of people outside of crypto when they hear all the developments in quantum and they don't see the resistance on the crypto side. That could be a pretty big problem. So I think that addressing that early on and having, you know, a solid effort to fix that is huge. So I'm excited about that. Finn, what do you got?
Can I guess? Whoa, I want to guess. I've got two options here.
Go on.
What Finn's favorite is going to be. It's either going to be Bulk launching BIP1 or it's going to be Orca introducing Auto Compound. Surely.
0 from 2, Jack. I'm sorry.
Oh,
no, look, I'm gonna echo Thomas here. I'm gonna go Anza publishing quantum resistant designs because every blockchain, every crypto product, every tech-based protocol in the world at the moment, I think needs to have a post-quantum plan. Jack, we've talked a lot about the quantum threat in the past. You know, obviously, we're not quite sure when that quantum D-Day is going to be, but people need to be thinking about it. And if you're not thinking about it, you stand a serious risk of being left behind. I'm happy to see Anza doing this. Obviously, Anza is brilliantly intelligent. They're working on Alpenglow. They're a big part of all of Solana's success at the moment. So this vote of confidence that they're giving to quantum resistance, I think is massive. So yeah, that's the big takeaway for me is Anza working on quantum resistant designs for Alpenglow.
Yes, shout out to the Gigabrains over at Anza. Without them, I think this idea of Solana as a chain being quantum resistant would be sort of a distant pipe dream. But you can find plenty of research, plenty of papers about Solana's quantum readiness, either on the Anza website or on Solana's official website as well. Reminder here that Seeker Summer is still live. If you do have a Seeker, you can see one there behind me. I've got one in my pocket. Then Seeker Summer is live. You should probably be using it every week or so. There are new sets of challenges. You can collect 8 badges, and rounds 1 and 2 are over, but that means rounds 3 and 4 are very much in full swing until the end of August. So 25 million SKR tokens for round 1 and 27 million SKR tokens were allocated for round 2. If you do have a Seeker, go and use it. Otherwise, you're probably leaving rewards on the table. Finn, Thomas, what do we have here? Trading Floor. One of the craziest pitches I've ever heard in my life, which made me so bullish and actually went and did something about it, was the Tulip King Eli Lilly pitch from this week's episode, which was on Wednesday. Go and watch it if you haven't, but what a crazy episode.
Oh,
It was
so much
brilliant.
fun.
It was brilliant. Yeah. Tulip King, Squid, two of the smartest people in crypto, I would say. Even when we announced the lineup, we had incredibly smart people also saying goats. There was a very high signal conversation from both guests. To your point, Jack, after hearing Tulip King talk about Eli Lilly and the opportunity there, I also went and did something about it. I think there's a lot of alpha in the brains of guys like this. And we're going to come back with another stacked lineup next week as well on the trading floor. So again, if you haven't heard that conversation, go check it out. Thomas, did that jazz your trading brain at all? Listening to these two goats speak.
Oh yeah, it was so awesome. I mean, if you got to listen to that Tulip King thesis, right? His thesis was so good that we just let him cook, right? He was going on, like, it was probably 6-7 minutes where, normally we butt in and ask questions, and I was like, actually, I just want to hear it all. I want to hear him keep talking. Like, we only gave him, I think, 20-25 minutes for this segment, and he blew past it because we needed to hear it. Like, it was a fantastic breakdown of his analysis, and I mean, it was really interesting. I'm invested in it, so I liked hearing that. And then also, I mean, Squid was fantastic as well. He's one of the top traders on FOMO, so to hear his mindset, hear how he thinks about trades was awesome. I mean, he showed us subnet summer, which I didn't see that coming at all. Like, we obviously would prefer if it was a Solana token that they're going to be talking about, but I mean, it was an interesting take. I haven't heard the pitch for that, so I felt like I learned a lot about that. And I mean, yeah, Tulip King was so great. Like,
Do we
was
have
going
any
back.
alpha? Do we have any alpha for next week? For reference, by the way, we have to say this is not financial advice. Yes, we heard a very compelling argument as to why Eli Lilly will probably become a $5 trillion plus company in the coming years. And we all, as a result of that pitch from Tulip King, became very bullish. But that does not mean that we are giving any financial advice, legal advice, investment advice at all. If you do want to hear the pitches from the guests themselves, along with the theses, which we challenge, then you can go and tune into Trading Floor. But do we have any alpha on the guests that are joining us next week, or is that too soon?
I can share two little hints, Jack. So we're going to have the
Okay.
founder of one of Solana's most exciting DeFi protocols that I'm incredibly eager to crack into his brain, see what's going on in there. And we also have the founder of a derugged Solana NFT project that is a real veteran of the space. If I harken back to the dark days of 2022 when ETH collapsed, I listened to this founder speak, and he said, "Listen, Solana is still the most performant chain in crypto. I'm selling my truck to buy as much sub $10 SOL as I can right now." And he probably pulled off one of the greatest trades we've ever seen. So
What a
you're
trade.
going to want to tune in next week to hear these guys talk.
Yep. And we
Absolutely.
also have another trader coming on as well, who I'm very excited about. He's founder of a big digital collectible site, he's the dev behind a bigger meme coin that he helped launch, but he's also been trading through multiple cycles. So I think we've got like a great roundup. Like, I think that lineup is going to be exciting again. I just feel like the structure of it and everything, it's so exciting to go through these trades that I learn a ton. And yeah, it's fantastic. It's a lot of fun to do those shows.
That's going to be next Wednesday, August 5th at 11 a.m. Eastern Time. If you are on UK time, like me, that is going to be 4 p.m. And if you are somewhere in the center of Europe, then that is 5 p.m. Be there. There's plenty of alpha. Now, let's talk about the stat of the week. This one's interesting. It comes from Bitwise. Bitwise, as you know, Matt Hogan, previous guest, the team that launched BSOL, by far the most successful Solana ETF. So, Finn, what's going on here?
So Bitwise here is accentuating Solana's stake rate. 67.9% of SOL is currently staked. This is people who believe in the long-term vision of the network. They're committing SOL to their validators. They're boosting the economic security of SOL, and they're there for the long term. That's $32 billion in total value, earning 5.8% on the year. So look, the biggest, smartest people in TradFi, they are staking their SOL you should be staking your SOL as well. If you don't want to go the whole hog with validators, just chuck it in LST and make sure you're getting that yield. But look, people are committed to SOL for the long term. The staking rate proves that it's better than most other chains out there. So very, very encouraging.
Stake your SOL. If you're holding SOL, stake it. It's that simple. State of Solana in a tweet. This one, honestly, this one made me laugh. It got me. What do we have here?
This is one of my favorite State of Solana in tweets I think we've ever had on this show. So Ready Layer 1, if you don't know, he does updates and changelogs on everything happening in Solana in Devland. He's brilliant. You should go follow him and check it out. State of Solana in a tweet from Ready Layer 1. XDP, 100 million CU blocks, shorter slot times, larger transaction sizes, Alpenglow, rent reduction, work it harder, make it better, do it faster, makes us stronger. Channeling some Kanye Daft Punk energy. And I concur with these statements, right? Everything is happening on Solana. The fundamentals are better than they've ever been before. The chain is getting stronger. It's never over, guys. We've never looked better.
Yep, as you wrote very early on in the newsletter for this week, Solana has fundamentally never looked better. I think it's a good way to think about the week. We sort of started our conversation today with Regulatory Roundup with Rebecca Rettig, and she's basically saying the same thing. Look, fundamentally, everything is moving in the right direction. Yes, there are these hurdles. Yes, they're somewhat politicized. Yes, they might not get resolved in the immediate future, but it doesn't subtract from the fact that massive amounts of DeFi innovation is underway. The amount of novel platforms that are being built on Solana, nothing is changing. So plenty of reason to be bullish. And if you listen to people like Ansem, apparently we have bottomed and it is only up from here, although I'm yet to be convinced that is happening immediately. But that is your week. Rebecca Rettig kicked us off with Regulatory Roundup, clarity news that you're probably not going to get anywhere else. So tune in next month as well. We'll be catching up with her to find out what happened after the August 7 recess. Are things moving in the right direction? Are they stalled completely between now and the November midterms? We'll find out from Rebecca herself. Make sure you're subscribing, by the way, to SolanaFloor on YouTube. Turn on notifications for X so you don't miss anything. We tweet all day, every day. And some other updates that I think bear mentioning again. Solana's block capacity up 66%. That is truly immense, assuming, of course, that block space actually gets filled, right? Let's see what happens and how quickly that gets filled. Morgan Stanley's MSOL ETF went live to 16,000 advisors. Huge. Ownership coins are roaring back with a solid run of MetaDAO launches, massive oversubscription figures. So congratulations to the futards. And perps also at an all-time high quarterly volume. Not quite there as far as being able to compete with Hyperliquid on open interest, but we are getting there. People are finally saying that Solana is looking fundamentally great here. You've got massive amounts of progress happening in perps and prediction markets. We also saw that AI wallets are going viral. Offering free money, it turns out, is a great way to get people to try your new tool, your new shiny, and a $1.68 trillion credit market potentially coming on chain. Now, the theme, I think, looking back at all those headlines, is that, again, the fundamentals are great, even though things in DC appear a little bit delayed. So the product isn't going to wait for politics. Launch something great, incentivize people to use it, and they will come and use it. We will be watching, of course, clarity updates very closely going into next week, because today is Friday. Next week, Friday, is August 7. And on the 8th onwards, they are in recess. The politicians are probably not going to be doing much until they come back. I personally remain very optimistic, although we saw this morning before going live that the polymarket odds of clarity passing in 2026 dropped from 27% down to 22%. Let's see where that goes. Finally, lads, trading floor Wednesday next week, 11 a.m. ET. What do you think the trade is going to be between now and then? My final question to the both of you.
I'll take this one first. Crypto dumps over the weekend while the war escalates, and it's all gone in green by Monday. And my bags outperform fins at perp.so/trading floor.
Bold, very bold. I think, I would say something similar. I think the trade, at least until next Wednesday, is stables because it's choppy out there. I don't think we haven't seen the worst of the damage from the Leo unwind. I'd be cautious about entering anything right now.
The trade is no trade.
I like Bitcoin too. I like
but
Bitcoin.
No trade is a trade.
That You're absolutely correct. You have me stumped on that one. Finn, Thomas, thank you both very much. It's been a very eye-opening conversation. I look forward to tracking your wallet progress over the weekend on perp.so/trading floor. And with that, I wish you both and our dear listeners a lovely weekend.
Thanks all.
Cheers, fellas.